GM. GM. So, daily levels. Today is the 1st of February, so new month. Let's take a look at the monthly close. Monthly close basically with a doji. So from here, wouldn't be surprised for Bitcoin to spend a month consolidating, going sideways, chopping around a bit. And then on top of that, we got Powell's press conference news and the Fed decision yesterday, which I think this Bloomberg article sums it up best, or Bloomberg headline. Fed's Powell cements pivot but pushes back on timing of cuts. Perfect. Because everyone was super focused on the fact that the Fed were not going to be cutting rates in March. He basically said that. He basically said, all signs are that we won't cut in March. And so the market took that to mean the first cut will be in May, which is the following meeting after March. But what's good about that is, like it says in this headline, the pivot's actually happening. It's the first time he's indicated directly that they are going to cut rates. Before that, it was just, the members estimate that we probably will. And like, obviously people knew that they are planning to cut, but this was where he outright pretty much put a date on it. He didn't say May himself, but the way he said not March, I think the phrasing of the question was just that it was one meeting too early. So it's May, right? The next meeting's March, following meeting's May. Is that really bad? It's definitely bad in terms of the nature of the market, right? As we see, Fed Watch. You can see here. So now, if you remember, you've been watching some of these daily levels the past few days. The odds of them keeping the rate where it is for March have increased significantly, up to 65%. Just last week, as you can see on the probabilities at the bottom, just a week ago it was 50%. Right? A month ago it was only 11%. So a month ago, the market was pricing in almost 90% chance that they would cut rates in March. Now, they're only pricing in a 35% chance. That drop off, that difference, that's what's bringing the markets down, just taking a little bit of air out of the markets. But is that warranted? Is it justified? Does it really matter? Today I'm going to do monthly preview, a deep dive, and I'm going to break down the difference for you between actual liquidity and essentially useless policy levels. This is the same kind of trap that got people really bearish at the end of 2022, whenever we were bullish. That's when everyone was calling for recession. End of 22, start of 23. They were all looking at, look at inflation. Inflation's so bad. Look at now, everything's going to slow down. Everything's going to crash. Look how much they're hiking rates. That's always lead to recession. Look at the yield curve inversion. They're taking just binary data and not applying any kind of context or logic to it. And they're getting themselves fucked. So, this is the same. People are like, but Powell said he's not going to cut rates. Oh no. Do people even know what that means? Cutting rates itself is just an indication of the path to come. So, let me phrase it this way. When they actually cut rates from 5.5 down to 5.25, doesn't mean anything. Literally nothing changes when they do that. Like, it doesn't suddenly put billions of dollars into the market. It's not a liquidity injection. It's not money printing. It's not money quantitative tightening. It's not taking money away. It's none of those things. The effects of rate cuts and rate hikes are felt months and months and months later. So the only difference, the only change it makes is to investor psychology. So now you need to think about this, right? If the only change it makes is to investor psychology, because if rates start to come down, People are saying, oh, we're on a path towards lower rates. We're on a path towards easier monetary conditions. We're on a path towards cheaper debt. That's good. Let's load up on risk assets. It's also less incentive for me to hold government bonds, T-bills, use a money market fund, which means I'll take my cash out of that and put it into Bitcoin, stocks, whatever. So since it's only a psychological thing and the real effect is felt many months later, then why would there be much difference? This is going to, at most, push the market back by 2 months, at most. Because if the market was expecting cuts begin in March, now they begin in May, that's what they're going to price. But remember, it's psychological. So at what point do people say, and I think this moment comes much sooner than people think, and there's going to be an amazing opportunity for a long very soon, in my opinion, but not just yet. At what point do people say, oh, okay, the rate cut isn't coming in March, but he all but guaranteed it was coming in May, and since the rate cut is just a sign of things to come, it's not actually liquidity, why are we fucking de-risking? Why am I getting short? Why am I buying puts? Eventually people will realize this. So allow the fear and the panic and the washout and all that shit. And I do think it goes down before it goes up, because the market does have to adapt. Remember, let me put it really simply. The market, again, rate cuts don't mean shit by themselves. The expectation, how the market and how traders interpret it, that's what matters. So, in December, you remember the Fed meeting in December where they were super dovish? That was 11% chance. So on the 29th of December, let's say, the end of last year, and I'll not use, should I use Bitcoin? I'll use the total crypto cap, because Bitcoin, ETF, narrative and all that kind of stuff, a little bit less. We'll look at crypto as a whole on the 29th of December. Right? So crypto as a whole was up here on the 29th of December. That was when the market was pricing in 90% chance of rate cuts starting in March. Now we're at the exact same price. Fast forward a month. And the market is now pricing in a lower chance. This is more apparent when you look at the stock market. There's no ETFs here, no external factors. It's just purely based on the Fed and the Treasury and global liquidity. 29th of December it was over here. So that's where stocks were when it was priced in at 90% chance that they were going to cut rates in March. Little sell off into the new year, rallied higher. Here we go. So prices are higher than they were whenever the supposed expectation of rate cuts was more dovish, which should be better for markets. So what the market's reacting to now, and it needs to find a level, needs to find a balance, is with this new information, with the rate cut being pushed back, how low do we have to go? So I do think there'll be some kind of pullback. I don't think it'll be a significant one, really. I think the 20-day moving average is a really common one in stock market. I mean, it's common in really all markets, but I don't particularly use it for my trading, but I know it's something that people look a lot at in TradFi. So there's a 20-day moving average. That's a little bit lower for the stocks to go. I think it can easily get to there. You've then got your 50, right? Your 100, your 200. These are 50 and 100, they're EMAs, 200 day. I just can't be bothered to put this simple moving average on. You can do that if you want. But in an uptrend, right, price can pull back within that. You can see here that we've had a nice low form, and a second low. We've had two solid lows that have formed, and we've rallied for basically 12 weeks. No, end of October, all of November, all of December, all of January. 12-week rally, right? There's loads and loads and loads of time and loads of room in the chart for it to pull back into some of these bands and set up a higher low. That can happen. That would also pull us back below all-time high. It would get everybody saying, oh, look, the big crash is coming, all of this nonsense. So I wouldn't be surprised if that happens. But you have to remember, nothing at all is even remotely bearish when it's at all-time highs. Now, when it gets back below that, it can be. But anything above that, above this black line, can just be a normal retest. So it's more the expectation versus the reality. And my assumption is that people will overreact to this as if what Powell said was like insanely hawkish, insanely just terribly bearish. It was bearish relative to expectations, so the market will go down because the market was expecting him to be more dovish. But is it actually fundamentally bearish? No. I don't think so, because he did say we're going to cut rates. Might be a little bit later. But then you ask, why is that? Maybe because they don't need to cut rates yet, which in itself is a sign of strength. There's no rush to cut rates just yet because things actually aren't that bad. And they're still sort of slightly worried about inflation, so not everyone's going to be hyper-focused on the next inflation print. If inflation keeps coming down, the Fed will be pushing towards that path of cutting. And then the most important thing, which is liquidity. So I'll deep dive liquidity on the monthly preview. So overall, for Bitcoin, I think we go back to this breakup, the point where we broke out from. If you remember, all week I've been talking about this. I took my long trade. My long trade was based on, I'll just move some of these paths out of the way. My long trade was based on us being oversold, people getting too bearish at the lows, got long, took profit, closed the rest of it this morning. This red zone, if you remember, is a key high volume node for Bitcoin. We pushed above it, swept out the highs, tried to go again, fell below it. So below this level, below this kind of 42.8, it's short-term bearish for the market. That's nothing crazy. And I think it just takes us back down to probably this daily impulse level, right, where we pushed in and we broke up from. That would be anyone who started to FOMO in on the rally, just round trips their trade, and then away we go. That'll be where I would expect it to go next, back towards 40. I don't think it goes any lower than that. And it can go higher as well. But you have to wait and see. I think a little bit of time is needed. The market needs to adjust. But there was a big tell from the market, in my opinion, yesterday, which is Jupiter. Big flop. So remember this, and remember what these people online shilling you bullshit were saying. Everyone will go and pretend that they weren't shilling you fucking Jupiter for the last several weeks, telling you it's going to be the biggest and best and greatest thing that's ever existed, when it's just a basic DEX aggregator. And the simple fact is there's not enough liquidity. There aren't enough people willing to buy a $1 billion airdrop on Solana. So it can go up. I'm sure it'll be okay. I'm sure it's a great product. I've used it, but that's nothing to do with price. So Jupiter's now below Uniswap's fully diluted value. But the main thing is pre-market. It was trading between 66 and 69 cents. That was in the pre-market before it went live. So to be below that is just outright failure. Below that is a total flop. Trading below your pre-market level is a flop. Why? Because like I said, $1 billion was airdropped to people. Right? They're taking profit. And there's no demand on the other side. Or at least there's very little demand. That's not altogether surprising. Because like I talked about I'd done that big breakdown before Jupiter launched. The two biggest red flags for me was the founder talks about price, bad, and it's super hyped. But there's a fragmentation of liquidity that's happened over the past 12 weeks. I'm sure you've noticed. You have to think about crypto in this way. If you go to the stablecoin market cap, where are we? I think it's all the way down here somewhere. I added it to my watch list the other day. Here it is. Drag it up. So there's only so much money in the market, right? And my main thing I was saying to you guys was, as long as this is going up, the market's fine. The market's pretty healthy. And so stablecoin market cap has been rising, meaning money's flowing back in. Quite obvious to see that when the stablecoin market cap went on a fucking one-way up only trend, that was our bull market. We then had our bear market where the stablecoin market cap was down only, and then we had our choppy phase where it was sideways. Now it's going up again. So that's the main thing to still keep looking out for crypto. But this is not going to go, I mean, it might keep rising like this. I wouldn't be surprised if stablecoin cap for a few weeks just goes sideways. And if it does, that means no new money's coming in, right? It won't actually go like that. It'll just go like this, as you can see over here. No new money's coming in. So the problem with all these new project launches is that you have the same amount of money chasing more and more projects. So in the past 3 months, we've seen Celestia, we've seen Pith, Jito, Jupiter now, we've seen Manta, we've seen Ondo, we've seen a fucking bunch, and way more besides that. So many more that I can't even fucking remember. Some of these new charts. Beam was a relative new one. Say, how could I forget Say? WorldCoin was a few months before that. Inspect, I think it's Inspect, isn't it? Yeah, INSP, Inspect. And so, if you have all these new projects coming in, but roughly the same amount of money chasing them, it's going to take and pull money away from altcoins. Not Bitcoin. That's why I said earlier, Bitcoin bullish, AI bullish, and altcoins bearish. There's now, you're going back to this point where there's a limited pool of capital, right? So there's a limited amount of money that's trying to chase new, more and more and more coins. For Jupiter to just keep going up, there has to be somehow $1 billion of buying pressure, like $1 billion net of support to stop people from just dumping their Jupiter into Sol. Where does that come from? It probably bleeds out of other Solana altcoins, if it does at all. Or if Jupiter goes down, it means people are selling their Jupiter for Solana or for USDC, which again is totally fine. That's just the nature of the market and the game we're in. So why do I say AI? I think it's super clear, and Ondo has been the biggest example of this. Ondo should have been a good project, or Ondo should have had good hype and good momentum, and it has none. Why? I don't think people care about real world assets. That has been my base case all year. I saw this one right after Larry Fink talking about tokenization, and this Ondo is like TradFi, BlackRock, we're going to invest in the money market funds, all that kind of stuff. So this was like a perfectly tailored setup to latch onto the real world assets narrative. Flopping. Again, that's fine, right? But it's telling me something. Manta had a nice run. I think Manta's probably on the right side of the V here, meaning it's had its run up. It's probably now going to bleed back down and find a base at lower prices later on. because there's just not enough new money that wants to come in and buy another layer 2. It had a nice run. Going from $2 up to nearly $4, that's a nice run. That's almost a 2x. That's good. That's great. You're not going to get 10x moves. Like Celestia was an absolute outlier in that sense, where Celestia had its big run from $2 to $20. But now you've got the same number of people roughly, right? There isn't a massive inflow of new people with all this new money coming in right now. So I think the market as a whole, total 3, is going to go back to its sideways shape, like I was talking about. We pushed up, pushed down. Maybe we go down as low as the 2021 lows. Maybe we go sideways. I think the altcoins will continue to chop and consolidate. But these newer launches and most of the centralized exchange alts and just altcoins in general will bleed. The only narrative that I can see that's going to bring billions of dollars of new capital in off the sidelines is AI. Because it crosses over into mainstream. It crosses over into normies. And it's very VC friendly. They all want the next big AI project. So I'm super bullish AI, I'm super bullish Bitcoin, and I'm bearish everything else in terms of narratives. As for price, I think everything can pull back, even AI, like even Akash, right? I bought more Akash at around 40 cents, 240, sorry. It's at 270. I think AKT can set up something like it did back here. I wouldn't be surprised if it does that, right? Where it comes down to the lows, consolidates, and then goes higher. Again, that's a bit of sideways. We've gone up for uninterrupted for 12 weeks. Going sideways for a couple of months will be a really good outcome. I also think AKT can make a new high because it touched the 50 EMA. And often when you touch that 50 EMA for the first time in a strong uptrend, you make a new high. So it might go there, but I think that would just again set up a consolidation. Regardless of which path it takes, to me it's clearly obvious that AI is the best thing to be involved with if you're not in Bitcoin. Everything else has been tried. Tried pumping layer 1s, tried pumping layer 2s, tried pumping real world assets. Some of them have done okay, but they're not going to cross over mainstream. It's just crypto traders trading. AI will go mainstream at some point. If we have an actual bull market, AI will go mainstream. It's the most obvious narrative ever. And being obvious doesn't mean that it's bearish, it's crowded. No, it's actually not crowded because it's so new. There aren't even many projects yet that are legit. So if anything, it's going to take even longer because VCs are only just now trying to get their money into it. The reason you're not seeing AI shilled heavily everywhere by all the big VCs is because they haven't got allocation. They're shilling you their dog shit layer 2s. They're shilling you their old bags because that's the stuff they invested in 3-4 years ago. So in the short term, I just don't think there's enough. In a simple sense, don't think there's enough money to keep altcoins at the level they're at, and they're going to drop back. I think that money will flow back into Bitcoin, and I think Bitcoin looks great, and Bitcoin's healthy, and Bitcoin's strong. I do think it can go lower. Definitely wouldn't short it, wouldn't even dream of shorting it. And I've closed out my long trade, but I'm still long spot. I want to get more spot. But I think if we come back, the next time I'll look at a long trade, we'll be back down here around 40, if we can get that. Or if it reclaims, possibly if it reclaims the red zone, we might see a push higher. And so that's what I'm looking at over the next little while. But I'll deep dive on that on monthly preview. That's it. GM. See you later. We'll do a live stream for altcoin requests later on. GM.